Guys, welcome to the first video in this mentorship series, and we're talking about what is forex trading and how it works. So basically, this is the first video and sharing some insights on what exactly forex is about. So this is a beginner friendly video for anyone who just chanced upon forex and wants to know how it works, right? So forex trading, what exactly is forex trading? Forex trading is foreign exchange trading. Okay, so think about it like dealing in the exchange of currency pairs between countries, between commodities, between stocks, anything that is foreign that you can exchange is what forex trading is about. Okay, so the name forex trading actually comes from the word foreign exchange trading. That's what it actually means. So foreign trading is a decentralized global market where all world instruments can be traded. Forex trading is a market where retailers, institutions, banks, and investors, right, exchange, buy and sell world instruments. So it's a market where everybody is allowed to participate in. That's what means by is decentralized. So it's not centralized to some specific people. It is not centralized to them. It is actually decentralized where retailers, everybody can join in. As much as you have a broker, you have money to be on the forex market, right? So what are some of the instruments that we're talking about, and what are the things or the instruments that we buy and then we sell? So forex trading is all about buying and selling. Okay, so what are some of the things we buy and then we sell? We can talk about stocks, stock market, we talk about currency, cryptocurrencies, we talk about synthetics, we talk about commodities, indices, futures, bonds, and currencies. So these are the instruments on the market that we are allowed to engage in buying and selling. Let's dive deep into some of the instruments and explain exactly what it is. So this is a step-by-step, as I said, step-by-step approach to what trading is about. So you have to understand what you are trading and which of the specific instruments you want to trade, or what are the instruments on the market you can engage in. So when we talk about stocks, we talk about um, a representation of ownership in a company. Because if someone says buying stocks, it means that you're buying Tesla or Amazon or Google or MTN. Basically, when it comes to Africa, MTN is all over, and people buy um, shares in MTN, or they have a representation as part of ownership of a company. So basically, yeah, that is stocks can be traded on the foreign exchange market. We talk about bonds. Okay, bonds are debt securities issued by government, municipalities, or corporations. So we have the U.S. government bonds. We have Ghana government bonds. I'm specifically using Ghana because I'm in Ghana. I'm a Ghanaian trader. Talk about bonds can also be traded on the world foreign exchange market. Talk about indices. So indices are mostly benchmarks or measures of performance of a group of stocks representing a particular market or a sector. So indices are mostly a measure of average, mostly for the stock market. We have S&P 500, which actually represents 500 companies in the US. They are measure of performance. Okay, we also have NAS 100, that's US 100. We also have US 30, that's also 30 companies. We also have NAS 100, NAS 100 also 100 companies. So it's an average of, or is a measure of their performance that is used for those indices. We also have Russell 500, JET 30, and the others. Okay, we have futures trading. Futures trading is most commodities or stocks have futures trading. We have futures market for itself, and there's an agreement to buy or sell an underlying asset at a predetermined price on a future date. Cryptocurrencies are digital or virtual currencies here. So we all know what mostly cryptocurrencies are. Cryptocurrencies, Bitcoin, Ethereum, Solana, Ripple, Dogecoin are also traded on the world foreign exchange market. Talk about commodities as well. Gold, oil, cocoa, cattle, raw materials, agricultural farm produce like cotton, bulls, soybean oil, soybean itself, maize, all those are also traded on the world markets. And they also have their futures prices too as well. Right. Currencies, the mostly traded instrument on the world market. So buying and selling foreign exchange pairs like USD like USD also odd USD, and all the currency pairs you can think about. Even USD Ghana cedi, that can also be traded on the world foreign exchange market. So yeah, that is currencies. And we have synthetics. And synthetics are probably, let's say, the artificial is an artificial part of or man-made part of the market. So we have some commodities like VIX 75 boom and crash step index. It's mostly coming out from a broker called Deriv. So synthetics is also something you can trade on the world market. Okay. So let's go ahead to talk about how does the forex market work. Okay. So the forex market works in a sense that this is a scenario. Understand that the market works in a buying and selling arena. So if you are buying something and it's always paired with, it's always in a pair. So if you understand it in this way, it means that if you are buying something, if you are buying a pair, you are buying one and then selling one. Or let me use a more technical word. If you are longing a pair, you are buying one and then you are selling one. Okay. So let's take a scenario like if I am buying a drug from the pharmacy, okay, and I'm holding my any currency at all, probably let's say the USD or let's say any currency I have. I am selling my currency, which is the money you have in your pocket, and you are exchanging it for the drug that you are buying. Let's say you are buying a drug like paracetamol. So it is going to be your currency slash paracetamol. Okay. So if you are buying paracetamol, it means you are selling the money in your pocket. So what is the price of one paracetamol against the currency you are buying? Probably one paracetamol is 1 USD. Okay. So if you buy one paracetamol, it means you are selling off 1 USD. And again, if you have the paracetamol and you want to go back for your 1 USD, you have to go sell your paracetamol and then take back your 1 USD. So in this case, you're selling your paracetamol and you're buying the USD. That is the basic scenario of how the market works. So let's take it to the market. So currency trading involves buying and selling of one currency at the same time. Okay. So simultaneously, if you are buying USD it means that you are buying the dollar against the yen. And if you are selling USD it means you are buying the yen and selling the dollar. Okay, so it's vice versa. It moves simultaneously. When it comes to commodities, for example, talk about gold. Gold is always gold against USD. Okay, so stocks also always stocks against USD, indices against USD, crypto against USD, because the dollar is the most traded um, currency in the world. Okay, so someone says I'm buying gold, right? It means the person is selling his USD and then he's buying gold in a sense that he thinks that the USD gold prices are going to go up against the USD. So he's going to exchange his USD for gold and then keep the gold until he decides to sell his gold and buy the USD when the gold prices have gone at a higher price. So that when he exchanges his money back into USD, he's going to get a higher money or he's going to get higher profits. Okay. Same as oil. If someone is buying oil, it means he's selling his USD. The same way if someone is selling USD, the same way if someone is selling oil, it means the person is buying the USD against selling the oil that he or she is holding, or he or she is holding, or betting that oil prices are going to go down. Therefore, I'm going to buy more USD against the oil prices. All right. BTC saying. So as we go on further, you're going to understand it. So that is basically how the market works. It's a buying and selling thing, and it's very simple. So let's go ahead to talk about starting out as a beginner forex trader. What are some of the apps and websites that you need to have on probably your phone or your gadgets? Okay, so we talk about trading platforms. We're talking about MetaTrader 5 or MetaTrader 4. Okay, talking about CTrader, talking about TradingView, talking about the news websites or the apps that you need. You're talking about investing.com and Forex Factory. Those are the two most widely used um, news providing websites for Forex traders. And when we talk about brokers, we have a lot of brokers, a lot of verified brokers. And a few examples from where I sit in Ghana and in Africa, the most brokers used in this part of our world is XM Global, XNET, Light Finance. Most people use IC Markets, some other people use other brokers, but XNET and XM is the most widely used brokers in Africa. So these are the brokers you need, okay? And these are the platforms, or these are the apps you need to have on your device as a beginner forex trader. And you have to talking about the types of accounts you can have starting out. Okay, so these are the three main accounts you can have um, as a beginner forex trader. Okay, you can have a demo account, which is a must have account as a start up person or someone starting out. Okay, how to have a simulated demo account. So we can have a demo account as a beginner trader where you can practice all what you have to practice. So a demo account is an account filled with or deposited with money that is not real. So it's a demo. And we also have pro firm accounts. Pro firm accounts are financial preparatory firms that provide accounts at lower rates. Okay, and it's also a form of a simulated account, but when you trade the account, when you buy the account and you trade it and you make some profit, the proprietary firm is going to give you some of your profits that you make on the account. Okay, so it's more like a demo account in a demo environment, in a simulated environment, but it gives you profit when you make money, right? But you have to buy these accounts from these proprietary firms. And we also have a live account. A live account is when you sign up with a broker and then you open a live account and you deposit your live funds, your money into the account, and then you trade them. So these are the three main types of accounts in the Forex industry. Okay. Now I want us to understand something about misconceptions and truth about Forex trading that I wish I can talk about and I've come to find out and I wish to share. Okay. So first of all, Forex trading is gambling. It's one of the misconceptions, right? I think forex trading is not gambling. Some people may argue that it's not gambling. Gambling is something you do without actually not being in full control. I mean, sometimes you just bet your money on it and not being in full control. But in forex, I think you are in full control of what you are doing with your knowledge and everything on the market. So you are actually kind of in full control of what you are doing. So gambling doesn't really fit for forex. Okay, that's one misconception. Forex trading is a get rich quick scheme. Yes, so anybody coming into this industry and thinking that I'm going to get quick rich, I'm going to get rich quick because I see people driving Lamborghinis, I see people saying I got into trading and I've made millions. You don't get it overnight. You are going to suffer for it. You are going to put in a lot of work to make this thing work for you. It's a whole journey on its own that is mostly um, seen successfully, averagely around 2 to 3 years. You should give yourself that time frame to learn, to gain some experience, and then you start seeing results. Okay, so it's not really get rich quick. It's really a lot of effort. You also, the one misconception people think is that you need a large amount of capital to start. All right, like you need like people say that the more the money, the more the capital, the more the reward, the more the risk, the more the reward. When you are starting out in trading, you should know that it's a learning journey and not um an investing area where you just start out and then you just have to go and put your money there. That's why you have simulated accounts. You have to start out to with the mindset that you are learning a skill. So you have to just forget about the large amount of money you want to use to start. Right. Even in a situation where now there are proprietary firms, you actually don't need in a lot of money. As low as $100, you can start trading and start seeing I mean real money from you being a better trader and team profits. So you don't really need a huge amount to start. Okay. And forex trading requires constant monitoring. That is also not true. When you get to a point in forex trading, you realize that it's not just about monitoring the chart always. It's about finding the way, a style for you to trade or your model of trading and when to trade them. And you get to know that okay, you don't have to be on the charts every time and then monitoring it throughout the whole day 24/7. You have no sleeps, you have less sleeps. That is not actually the case. There's always a strategy you have to follow. And high leverage guarantees high profit, which is also not true. Like the more you risk, the more you're going to get. It is actually not true. High leverage guarantees high profit, and it can also guarantee you losses too as well. The the code in this game is to stay in the game for long, not be in the game, not to be fast. And to be able to be far, to take you far, you don't have to be on high leverages, right? Otherwise, you're going to get flash out quick when you are wrong in terms of your analysis. And forex trading is simple. So some of the truths also in forex trading. Okay, so trading is a highly learned and practice skill. You really have to put in a lot of work to learn it and then practice it. Most people think forex is just like buy here, sell here. It's that simple, but you actually need a lot of learning time in terms of learning your technicals, your fundamentals, and practicing it to gain confidence. That is the truth about forex. It's all about confidence and experience. And then trading needs continuous learning. Very true. Very true. It needs continuous learning because you can never finish learning what is new on the market and what is coming from, global events and everything. It's just have to be you just have to be someone who wants to be learning continuously. And trading is an investment in knowledge, time, and money. That is the truth about trading. First is an investment in knowledge, and you have to be willing to invest in your knowledge by probably buying courses, watching YouTube videos, getting a mentor, paying for someone to teach you, paying for someone to hold your hand and lead you to your way to cut your learning curve very short. And also invest is an investment in your time. You have to put away some things to concentrate, to practice more, and also your money. Because if you want to make money, you have to put in money. You have to buy proprietary firm account. You have to invest in your live account and everything. So that is the truth. First in knowledge and in your time, and then finally in your money. Okay. And trading is a highly profitable and risky investment area. It's highly profitable and it's risky. That's the truth. Is nothing is guaranteed in trading. Nothing, no trade you take is a guaranteed trade. So it's highly profitable and risky. Okay, and trading is a regulatory environment. People sometimes are scared. Does this thing work? What if I go and put my money? What if the trading is a scam? What if um I trade, I get profit, and my broker runs away my money? And all those questions people have. You just have to realize that trading is a regulatory environment. There's actually rules that regulate this trading and treat this trading space. So just have to know that yeah, trading is a regulatory environment which is safe for you. All right. Trading brings psychological challenges. This is very, very key, and I want to hammer on it very, very well. If you are someone who gives up early, if you are someone who have psychological anger issues, psychological problems like um, you get worn out very quickly, you get discouraged very quick, you get angry at yourself, you want to hurt yourself, you have social interaction issues, then Forex is actually not your thing because it will bring you a lot of psychological challenges that your mind will have to take, your life will have to take, and you have to be willing to go through all those things for yourself to be able to become a better trader. Because the more you stay in this game, you realize that trading is not about actually knowing the market. It's actually about knowing yourself as a person. It's going to reveal yourself to you, and that's going to bring a lot of psychological issues. You feel pained. You bring a lot. It will bring a lot of regrets, and you have to be ready for all these things. Okay, that's a very very good truth about trading. And then risk and benefits in trading. Let's talk about the risks and benefits in trading. Okay, so one of the risks in forex is trading is that you can lose your money. You can lose all your money. Even a lot of traders have testimonies of losing their money in their early stages. It's very risky. You can lose all your money. Trading can make you have psychological issues, as I mentioned earlier. You can hit yourself. You can have anger issues. Your your social life can get broken. You can have a lot of psychological, I mean, problems, and you should be ready for that. That is one of the risks involved. You can commit suicide. Yes, people have committed suicide, and you have to be aware of that. Okay. Then what are some of the benefits that trading comes with? Okay. Trading, it makes you understand the international market. The international market becomes your friend. You get to know what is going on in this world. I mean, economic areas. Makes you gives you a lot of knowledge, opens your minds up to economies around the world, which is a good thing. I think everybody should know. And then you can make lots of money from the 7.5 trillion liquidity market cap daily. Okay, so the forex market has 7.5 trillion market cap liquidity market every day. So you can imagine the amount of money you can make with all this money flowing in the system. I mean, you can't make a trillion in a day, but you can take participate and make your daily bread from these markets. And then trading can make you financially stable when you do it right. You become financially free. I mean, you can do everything you want. Most of the live forex lifestyles we see on the gram and on the internet are actually true. They're actually living it. So because they've done it well. So doing it well can make you very, very financially stable. And you can practice for a long time on a demo account, not like other investments where you don't find any opportunity to practice it before you do it. Okay. Forex will give you the opportunity to practice it for as long as you want, and then before you enter in with your real money. So that is one benefit about forex trading, which is very good. You can find anywhere. So after that, what I want to talk about, what is the ideal way for you to begin your forex journey? The ideal way for you to begin your forex journey. Okay. And after going through this, I realized that this is actually the ideal way if you want your learning curve to be short. And the first thing you have to do if you want to be a forex trader is to get yourself a forex mentor. There are a lot of ways to become a forex trader, and you can't learn all the ways. I mean, there's a lot of ways for you to become a profitable trader, and you can't learn all the ways. So you just have to learn one or two, and that will be you learning it from someone who has actually tried it and tested it. And you have to learn from that person, and then you're on your way to actually having a good journey. You trying to learn it on your own is going to make your journey long, and you're going to waste a lot of time and money and effort. Right. So the second one is to put in a lot of time to study the theory. So you have to put in a lot of time to study your technical and fundamental analysis. If you get a forex mentor and your forex mentor is teaching you and you don't practice it and you don't put time into it to study it, it's not going to come by magic. Profits are not going to come by magic. You have to do it with your maximum time and with your maximum best of focus and commitment. Okay. That's what's going to get you for your journey to be successful. I mean, that's what has gotten all the forex traders who are successful out there where they are now. Time to study the theories and time to study like your technicals is going to put you there. Today I want to talk about practice what you study. Okay, so after studying, you have to practice. Spend time practicing forward testing, back testing, and putting everything you study in theory into practice on your charts. Right. So that's also the third step. And the fourth step is to not go into, so that's also the third step. And the fourth step is to not go into your account, or not just go into trading with a live account. Trade demo accounts to build your confidence. You are going to know exactly what to do, but the problem is, are you going to trust what you've learned? For you to trust what you've learned, you have to see it a lot of times, repetitive times on the chart, before you can actually want to put your money um, into that. And that you have the luxury to do it on a demo account. So demo account actually builds your confidence, which you have to do. Ideally, you have to be trading like 6 months of demo of what you've learned before you go into probably a profile account or a live account, just to save yourself of losing a lot of money. You really have to do that. You don't have to commit the same mistakes some of us did when we're starting out. And then, yeah, the first step is to create a proprietary account or fund your live account. So ideally, I think prop firms have come to save a lot of people from losing their live account. So from demo, you can buy a prop firm account as low as $32 for a 5K account on some of the firms, and you can start out from there, manage it, and that will be the best way than just depositing your money in a live account where you can lose it very fast. So from a profit account, then you can fund your live account. So what are some of the philosophies I have of trading I want to share? So I've come to find out that these are the philosophies that work. Okay, trading is not complicated. It's simple. So in my misconceptions earlier, I stated that trading is not simple. Yes, it's not that simple, but it's not that complicated either. Okay, so it's just a thin line between it being simple and it being complicated. And that thin line is you as a person. You are going to make trading complicated for yourself if you want to, and you can make trading simple for yourself if you want to. And that is only by setting rules and then following the rules, right? So the philosophy is that trading is not complicated, it is very simple. However, it is difficult without discipline. So if you don't have discipline, trading will become very difficult for you. You'll be you'll be seeing yourself anywhere, anytime, and it's going to be very tough for you. But until you decide to be a disciplined person, you can actually make trading very simple for yourself. If you are not disciplined, trading is actually going to let you is going to actually teach you to be disciplined, and that was going to cost you a lot. So you better be disciplined before you come into trading, and it's going to make your journey very easy. And again, the essence of knowledge is having to apply it and not having it to confess your ignorance. Okay, so the purpose of you learning trading is to be able to practice it and apply it. Okay, not just because you know about trading, it's just okay, and then just to confess that you're not ignorant, but you have to actually apply what you learn. Okay, if you don't apply it, it's never going to work for you. And if you're not practicing it, you'll never know how it works, right? And the truth and one philosophy is that nothing is guaranteed in the forex market. I think I said it earlier. Nothing is guaranteed in the forex market, no matter the amount of knowledge you have, and nothing is guaranteed. Anything can happen at any time. Trades are not guaranteed. They are going to hit your take profits and then you have stop losses. So you have to understand that nothing is guaranteed in the forex market. The market doesn't guarantee you success. That okay, when you become a fresh trader, you're going to become successful. You can actually become a very poor person. And trading is also not guaranteeing you that he's going to take all your money, but he can also make you successful. All right. So the most effective way, that my last philosophy is that the most effective way to become a successful forex trader is to directly learn from a mentor, which I did. Okay, I did learn from a mentor. So shout out to ICT for giving us these mentorships in his YouTube videos. If you're watching my videos, you know I'm going to learn ICT concepts. This was actually to end my first video, the philosophies, to prepare your mind to into going into the technicals of forex trading, talking about some of the terminologies and everything. So but then I decided to just add these terminologies so that you guys can go and then I just mentioned them, but then go and do more research on them if you actually don't understand it here. Okay. So everything I said earlier is to prep you. Now we are going into the terminologies of trading itself. So let's start with the first one. We have something we call bid price. Okay. Bid price is the lower price in a quote. Okay. So if you look at the chart, there's always two lines on your charts where you see a price up and a price down, always moving in lines. Okay. So the bid price is always the lower price in a quote, and then the ask price is always the higher price in a quote. All right. And then the difference between the bid price and then the ask price is a spread. All right. So if you go to your MT5 and then you just take any pair and you watch it, you see those lines and then you get to appreciate what I'm saying. Okay, so let's talk about PIP, which we'll actually dive in more in our next video. So PIP is the smallest unit price movement in the forex market. Okay, so the measure of, let's say, SI unit. Okay, let's talk about it. Let me use the word the SI unit. You know the SI unit for measuring length is meters. Okay, in forex our SI unit is called pips. Okay, so that's how we measure our price movement. All right. So lot size. Lot size is the standard unit size of a forex transaction, which will also go inside later in my next video. We'll do some lot size calculation and how to understand which lot size you use as and when you want to use it. Risk management, right? We have margin. Okay, margin is the amount of money required to open a leverage position in the forex market. So your broker gives you a margin, okay, that you can use in percentage. It's always in percentage. So you sign up the broker and then you deposit money. You always know the margin, and it's actually the amount of money required to open a leverage position. So you need a lot of margin to open a lot of positions. Okay. All right. So that's it. We have base currency. So if a base currency is the first currency in a currency pair. Okay. So if you take a currency pair like USD JPY, right? The base currency is USD, and JPY is the code currency, which is actually the next one. It's always the second pair which denotes a currency used to quote the exchange rate. Okay, so if you have a pair like XAU USD, okay, XAU is gold and then USD is dollar. So it's actually gold against dollar. So gold is a base and dollar is a secondary. Or is a quote currency. Have leverage is the ability to control a larger position with a smaller account of capital. Okay. So forex brokers allow you to change your leverage anytime you want it. Some also maybe might not. But the leverage is the ability to control a large position size. Okay. So higher leverage means you can control a higher position size. You have long position. So long position actually means that when a position means a trader buys a currency pair, expecting the value of the pair to go up. Okay, so someone buys a currency pair like gold, XAUUSD, means that the person wants gold prices to move up against the USD. So that's what a long position actually means. And the vice versa, a short position. When someone is actually expecting the currency pair to move down, the person or the trader is going to short the market. Also have margin call. Margin call is a notification from a broker requiring a trader to deposit additional funds into the account to maintain sufficient margin levels. So when your margin levels get finished, when your margin levels are very low and you can't sustain your open positions anymore, your broker is going to give you a margin call to actually alert you that this was going to happen. So you just have to be careful, right? Okay. So volatility. Yeah, volatility. Volatility is a degree of variation in the price of a currency pair over time. So if we have high volatility, it means that price changes will be going to be fast with time. When we have less volatility, price changes with time is going to be very long. Okay, so that's a degree of variation in the price currency pair over some time. So if we are going to have a very high volatility day, gold can actually move from 250 2550 price zone to probably 2540 in, let's say, an hour. All right, so that is the degree of variation. Some can also do that in a particular, they can use 3 hours to do it. That's going to be low volatility in the market. So yeah, I hope there's an understanding there. We'll get into more of this education later in the videos ahead. All right, so I promise to bring more videos as soon as possible to continue this lecture. And before then, thank you guys so much. Make sure you subscribe, make sure you leave a like, leave a comment on what you expect in the next video. You can ask me any question in the comment section, and I'll leave my link to my socials in my description below. So follow me on YouTube, as well as go to Instagram and follow me at the Church Trader. Go to Snapchat and go to X, and make sure you join my Telegram channel. Guys, thank you, and find you in the next video when I upload it. Bye bye.